check. 1, 2, 1, 2, 3, 4, 5, 6. I can count. Look at me go. It is Monday, January 6th. We'll get started in one moment. This sound check is checking. Oh, and there's the camera. Lights, camera, action. Oh, all right, let's get into it today. So good morning to everybody once again. I hope you have had a wonderful weekend with you and your families. Hope you had some rest. Hope you got a chance to unwind. Hope you got some time to yourself. And it is Monday, so it's work time. Back to living the dream. So in today's morning market update, we're going to cover the day, the news overnight, and then also we're going to cover the economic calendar for the week and some big events driving the market that could potentially drive the market. Then we're going to get into the trading plan and then screen share and set everything up over there on the charts. So we got a big one. Let's get started. Overnight, markets recovered a lot of the losses that they started with this week. But U.S. markets are still down about 2 to 0.3%. All right, there's mild sell pressure here into the open. Some pretty light volumes, though. European equities are slightly lower as well. Bitcoin, Ethereum are down. All right, the big story today and overnight is the Japanese intervention risk. All right, we talked about this on Friday, and we continue to bring it to your attention because I think this is one of those events that people, maybe because they don't understand, maybe because it's so far away from home, from where you are trading, that you don't think it matters, but it's really, really critical. In August of 2024, there was a massive downside in the S&P 500 futures directly correlated to Japan and what's going on with the yen, with the carry trade unwind and all of that stuff, right? There's big concern right now that the Japanese government is going to intervene in the currency, and the intervention is what could cause some issues as well. U.S. Japanese yen gapped lower from 155.74 to 153.40, below the 100-day moving average. So structurally, this gap down means the U.S. dollar gets weaker. The Japanese yen is strengthening. If the Japanese yen strengthens, there is further risk for the ES futures and the U.S. stock markets and also what we're talking about here. So the stronger the yen gets, the weaker the payoff of the carry trade, the more you're going to have to put up for margin, the more you're going to have to sell the things you bought with it, which is typically U.S. equities. This is where we're at. Japanese Prime Minister Takachi says government's ready to take action against speculative moves. They reaffirmed the readiness. They haven't done anything yet. All right. The New York Fed also, and you can see right there, you see the U.S. is getting involved already. You know that this is impacting them. The New York Fed conducted rate checks on U.S. Japanese yen Friday, which is a potential precursor to joint intervention with Japan and the U.S. All right. Two reasons for U.S. involvement. Number one, weak Japanese yen is driving the JGB sell-off, the Japanese government bonds, which pushes up U.S. Treasury yields, which pushes up the borrowing cost in the United States. There's a direct correlation. All right. And the second reason is a strong U.S. dollar Japanese yen is undermining the U.S. tariffs and their effectiveness on Japan. All right. So it's kind of deflating or reducing the impact because of the strong yen. All right. Bank of Japan gives no clear guidance of actual intervention yet, but if intervention happens, that would be breaking news and could have mild market impact, but strong market impact if it's something drastic and crazy. Think August 2024. All right, that's the yen. I'm going to just leave it at that just to put it in your calendar and move forward. All right, gold breaks the $5,000 level. Historic move. Spot gold's above 5,000, briefly hit 5,100 USD per ounce. Silver near 110. Precious metals are having big haven flows on government shutdown risk and then the intervention concerns and everything that's going on. All right. I mentioned one thing here, U.S. government shutdown risk. We got close to a funding bill, but it wasn't fully signed off on, and we are having this conversation again. The government is set to run out of money at the end of January. We just got off of the longest government shutdown in history recently. Democrats threatening the block funding package over homeland security provisions. Government shutdown increasing in likelihood. Blah, blah, blah. Partial government shutdown, though, not full one at the moment. And this kind of exasperates the risk-off tone in the U.S.-Japanese yen situation, which caused the concerns and fear, which helped us or caused us to gap lower in the market on Sunday's reopen. More on that in a second. The week ahead, well, we got a big week. Tuesday, we have consumer confidence. Today, luckily, we have nothing really important. We have some events, but they're not during the morning hours, and they're not really high importance. All right, but consumer confidence is coming in on Tuesday. Wednesday, we got a triple central bank day. This is probably the biggest event risk of the week. FOMC at 2 p.m. Eastern. Unanimous expectations are to hold rates. All right, and focus will be on Jerome Powell's press conference, any shift on guidance or timing of rate hikes. All right, so that's where the focus will be, but we don't expect rates to actually move in January. Bank of Canada 10 a.m. Eastern as well on that day, and Australia CPI. And yeah, is going to be on Wednesday. All right, as far as the FOMC decision goes at 2 p.m., I have so many notes that, you know what we're going to do? Put it this way. On Wednesday, it's the headline event. It's not really going to matter too much until Tuesday. Tuesday's tomorrow. Tomorrow we meet at 9 a.m. Eastern again. We'll make tomorrow about the Fed. Today, let's just keep things simple and concentrate to the things impacting the market today, because there's a lot going on. So with that, let's turn around. Let's hit the chart. And let's get some analysis and the trading plan for today done. All right, I'm going to do that now. Flipperoonie. Morning, Mikey. Morning, Marco. Oh, that's a decision, Mikey, that you get to make, and I'm happy you make it going in. It's going to be a good day. You know, days where you're not trading but still watching are days where you ironically learn quite a bit, because it's impartial learning. All right. I am going to open the note for you for today. I don't know if you guys like seeing it as I'm discussing it or if it throws you off, but we're going to try it anyways. I'm going to just throw it here. I don't think it hurts. It definitely helps me with the notes, just because I do all this before the market opens. So as you guys know, I am a big believer of story, and the story today. And let's start with the story in the U.S. session on Friday. When I tell the story, I like to start the story the prior full U.S. session and then expand it out to overnight, and then that bleeds into the trading plan. Because if you know the story in the last couple of days, well, the trading plan just reveals itself. And before we even go to the one-day story, let me just make sure I know how to use the pen tool. Let's go on the multi-day story. You could see we had quite of a big run-up last week that ended with a lot of compression and consolidation, but with volatility, we had highs that couldn't break around these 60s. We couldn't fully close the gap at 78 on last Sunday's reopen, and so we did have quite a bit of bullish momentum, but it continued to fail and stall out. All right, so where does that put us on Friday? Well, the open was at 69.34 half, which was here. All right, downside, we rallied into the 69.25. This yellow little thing here is what we call the quote-unquote flip zone, meaning long above, short below. And the flip zone is a key piece of my trading plan for the day, and I very rarely falter on it. I spend a lot of time and just think before I just set it. It's not a willy-nilly decision. So 69.25 is the basis of everything. All right, on Friday, we got down at 69.25. I was able to get a trade coming out of it with order flow that qualified pretty nice. It wasn't fully qualified. It was partially qualified. I took the shot, and I got the trade to the upside. I didn't carry it for all the extension upward, but we did go upward. We had a 69.64 prior day high get marked. That's here on the right. You can see PDH, prior day high. All right. And overall, though, on Friday, we had an inside day to the Thursday trading session, all right, which also interacted with our 25 level flip zone. So we had a consolidation. You could see it. It's narrowing in. All right, that was Friday. So Friday, we had an inside day to Thursday session. Then we closed at 69.45 PDCC, prior day cash close. Okay, that's right in the middle of the entire range of the last 2 days of the week. So pretty uneventful close. Now, The uneventful stuff gets more eventful in just a moment. So Sunday, we go to reopen because of the Japanese risk, because of the fears globally, because of geopolitical developments over the weekend and into Friday night. All right. We gap lower, and it's quite the gap. So Sunday's reopen. We got a Globex gap lower for a second week in a row. It gapped from 69.33 3/4 down to 69.04. Oh, where do you remember this level from? Well, that's a massive order flow level from last week where we had a huge activity, and sure enough, this is where the opening print is for the week. It's not a coincidence. When you follow the order flow, these levels end up working for days, sometimes weeks later when you have dramatic order flow occur. That's why I like to mark them on order flow as well. All right, so we drive lower on that gap open, so we head lower here into huge buying balances from Friday, but we set the overnight low at 68.79. That is the Globex overnight low session. Then we pick up the bid here pretty shortly after, and we rally all the way up to the prior day cash close. Some buying balances as a resistance, and the middle of the range for all intensive purposes of late last week. Okay, so we get a gap lower, and then we immediately recover it upwards. So, and we end up at the prior day's middle range. So what does that mean for the trading plan? It's time now to talk about the trading plan because you have enough of the story to start making some decisions. Well, I'll tell you this. The trading plan is 69.25 flip zone. It's a volatile open gap and fill on Globex. So we started with big gap, but we already filled it before we had a chance on the US trading session to do anything about it. That gives you right away a heads up that yes, we gapped lower, but there were enough buyers to step in and push us higher to close out that gap within the same session. Usually good news. All right, markets will use, I think, this morning to settle in to price for the week. It could be a choppy start. All right, below 25, the trading plan is simple. Below 25, we sell. Sell strength. Below the 25, including a break and retest. That right there would be a juicy trade. All right, that trade is far away at the moment, right? It's 30 points down. So, 20 points. 30 points now, yeah. Pretty much 30 points. So that's trade that could happen, but it wouldn't be the first one. The first one would be we're above 25. Where can we find a low risk, high probability entry opportunity above the 25? Well, here's the sad part. The sad part is there isn't a big juicy level I could tell you, look here. But if there was, I'd say 36 is decent. But what I'm going to tell you here is be a little more patient on the open and find some order flow levels to lean behind on the long side. And if you could buy some weakness, which is a pullback, great. If you got to end up paying high, pay high, but not too much above 52, 53. All right. And the reason being is because now you're starting to run into a lot of failed rallies, which could very well just end up being another failed rally. And if we fail here, and we get below the 25, well, that failed rally is disgusting at that point because that's a lower high that's now being established and a pretty significant lower high, as opposed to actually trying to test some of this liquidity up here, putting an equal high and being a little bit more range bound. Okay, so this is the danger in today. It's either a range bound, slightly bullish range bound day, or it will be a bearish continuation. So because of the gap, because of the recovery, I'm on the bullish side. If we hadn't recovered the gap and we're sitting at 25, I'd be opening firmly bearish for the day. But we got to give this market respect above the 25 level. All right. Open late to expand higher through resistance. Big resistance remains above, I wrote. Yeah, and we talked about that just now. Looking for initial targets. This is very, very important. Looking for initial targets today and not too many trailers. I'm not looking for a 30-point move. I'm going to find ways to do with 4-point, 5-point, 6-point move. Those initial targets may be all you get today. This is the kind of day I'm sensing it's going to be. So cherish those initial targets and don't trade for big extensions where you don't see one yet. You want to trade a big extension? Wait till we break the 68.70 level. You're going to get a big extension with a possible pausing point at 78 even, because that's where the gap was from 2 weeks ago. All right. Market stats for the day. Friday's volume in the ES was 1.223 million, pretty weak in comparison. In fact, one of the weakest days of the year. Overnight, 164. Now it's 176. Also weak considering there was gap in the price action. All right, zero gamma level, 69.06. It's pretty far away, but zero gamma is here where dealers would be neutral. Anything above has hedging risk to it. All right, and I'm going to start incorporating gamma a little bit more into my system. I'm just still working on it. And this is very important. You know, it's these days option markets tend to be the tail wagging the dog. Like they're the ones that tend to precede moves a lot of the times. All right, so we have to adjust and adapt because that's valuable information. Call wall 70.31, that's way up there. Put wall 68.31, that's way down there. All right, volatility trigger though 69.56, and we're approaching it, meaning you're going to start to see some two-way trade, and the risk is above 56. Whereas the opportunity for the long is about 25, meaning you're buying dips. The risk for the long is above 56 till we clear that 68.70. So now you start to see why today's day ends up being challenging, because the opportunity for the long is mostly gone. You're looking for pullbacks above 25. Weakness is great to buy into, but watch for order flow in the open to support your bias and your idea. Otherwise, you're going to get run over. Don't get run over today. SPX, gamma's minus 27 million on the dealer books. 1-day implied move is 0.6%, which is lower than expected. 5-day implied move is 1.48, which is higher than average. I didn't mean to say expected. I meant to say average. I have no expectations. This is option probability moves. 1-day implied is 0.6%. So 0.6% up and down from the current reference point, and the reference level for that report is, let me see, 69.46. So 10 handles lower, almost. All right, that's where we are. Any questions, OTM? Hope you had a great day or a good start to the day. William, hope you're having a good start too. TTF, my brother, Triangle Trading Floor. Good morning, Marco. I'm going to see you in the room just now. Mikey, again, appreciate you, brother. I will see you in the room as well in just a moment. So, guys, have yourself a great day. I do want to mention that on February 3rd, Tuesday, February 3rd at 7 p.m. Eastern, see this little banner down here? It goes this way and it goes that way. I'm doing an order flow revealed online workshop, and then there I'm going to show you guys the exact execution pattern that I use, answer your questions, it'll be very interactive, and tell you a lot about what's about to happen at TRADEPRO Academy. This is the biggest change, I would say, since I left in 2.5 years ago. That change is coming. This is the last regular week. If anyone's interested at the moment to join our team, you actually can't. It's the dumbest thing ever, but this is how technology works. There's no link. There's no way to sign up. There's no new members in our team, and it's the craziest thing to have to tell people, just hold on till February 3rd. But we had our entire cart system and checkout database get corrupted. It's a third-party plugin. We tried to work with their company to figure it out. We couldn't. So basically, it's a complete rebuild. So we decided to rebuild the new, not the thing we're deprecating. All right, you're going to tell you about all this and more in great, great detail, and share amazing order flow stuff with you. February 3rd, link is in the description. Join on board. We have nearly 300 people signed up already, and Zoom caps out at 500, but I'm not going to be this greasy guy to tell you, oh, there's only 500 seats. If 800 people end up registering, I'll upgrade Zoom to the biggest webinar package that there is. I don't care. I don't want you to miss it. I love you all. Have a great day. I'm going to see you tomorrow at 9 a.m. and get on the list. Join that webinar. There's going to be a lot of value. I promise you that much. I love you so much. Have a great day. Manage that risk. Trade Pro. Kyle Invest, thank you, sir. Appreciate you. William, thank you for the thumbs up. Mikey, I got you, man. I'm here for you and for everyone else. You guys have a great rest of your day. See you tomorrow. Sayonara.